Term life insurance in Canada, why it matters, and when do you convert it into something permanent? Most people think life insurance is something that you get and forget. But what if I tell you that the type of insurance you choose today could impact your family's financial future for decades from now? In today's video, we're going to be talking about term life insurance here in Canada, why it's a smart starting point, how it protects your loved ones, and how you can use it to build long-term wealth by converting it into a permanent insurance product down the road. Hi, my name is Laurent Munier. I'm a partner and advisor here at Safe Pacific Financial. And if you're new here, welcome. If you've been with us before, welcome back. We help Canadian business owners and their families to grow, protect, and transfer their wealth in the most smooth and tax-efficient way. You can work with us by visiting safepacific.com and sending us a message through there. On today's video, we're going to dive into term life insurance. What is it? Why it's important? How it fits into your long-term financial plan? And we're also going to talk about when and why you could convert your term policy into a permanent policy or a whole life policy down the road. So what is term insurance and who should consider it? Term insurance is one of the most popular, the most affordable and straightforward forms of life insurance that's available in Canada. It provides financial protection for a set amount of time, like 10 years or 20 years or 30 years, or until a certain age. So if you have that, it's usually till age 65. So what happens is if you pass away during that term of the policy would pay out and your beneficiaries would receive a tax-free death benefit that can be used for whatever you want. Usually that's to pay bills, cover funeral expenses, pay off debts, and maintain a standard of living. Because the coverage is temporary, a term life insurance premium is much lower than a permanent life insurance premium, such would be whole life insurance or universal life. And that makes it an excellent starting point for young families, for new homeowners, or anyone who wants to protect their loved ones without a huge long-term financial commitment. Why is it so affordable? Well, the reason that term life insurance is so cost-effective is really simple. It only covers you for a set time frame, a set period of time. And statistically, most people don't pass away during that time period. Unlike permanent insurance, there's no guaranteed payout unless you pass away during that coverage period. So this lowers the risk to the insurer, and this translates into lower premiums for you, especially if you're healthy and you're applying at a younger age. Now, who should consider term life insurance? It's really ideal for Canadians who have a specific financial responsibility that they want to cover for a period of time. So this could include young families. So you want to make sure that your kids are financially supported until they can get to an age of independence. And new homeowners, you've got a giant mortgage. You want to make sure that your partner can pay off the mortgage if something happens to you. Couples that have one primary income. So you want to provide income replacement in case the main income earner passes away. And also business owners, if you've got a partner. So you may want to protect the business and you want to use the insurance to fund what's called a buy and sell agreement. And then anybody that's got a limited budget for insurance. Term coverage provides high protection amounts for relatively low premium, especially if you set it up early. And then how does it work in real life? So let's say, for example, we've got a 35-year-old married person. They just bought a home with a 25-year mortgage. They've also got 2 young kids under age of 5. And so here you're at a point in life where the family heavily depends on this person. You know, a 20 or 25-year term policy for $2 million in coverage could cost less than $100 a month, depending on your health. So if the unexpected happens, the spouse can use the tax-free payout to cover the monthly mortgage payments, day-to-day living expenses, childcare, education, funeral, legal costs, and also paying off debts. It also gives your loved ones immediate financial relief and stability at a time when they need it the most. When does the term policy make the most amount of sense? Right? And then these are these kind of life milestones that usually trigger someone to look at life insurance. So you're getting married and starting a family. That's a huge reason people call us. Or you're taking on a large financial obligation, so a mortgage, say. Or you're starting a business and you need the coverage to protect your investment. Or you're not ready or you're not able to afford permanent life insurance, but you want the protection now and you want that option to convert into a permanent insurance later. And you also, another reason you might want this is you want temporary coverage now while you explore long-term estate planning strategies. So you want to get the insurance in place now so you know you got it, and then you can change it into something else later when you know more about what you want. So why do people choose a term policy over, say, a whole life policy? Well, when comparing term insurance versus whole life insurance, it's important to understand that each one serves a different need, especially at different life stages. So permanent insurance offers long-term benefits like a guaranteed payout. It offers cash value growth. Term insurance is often the best option for people who want a high coverage amount at a very affordable price, especially during early years where it's like the most financially demanding part of your life. If you're a young Canadian professional, a new homeowner, you're a parent with young children, term insurance can offer the right protection at the right time without breaking your budget. When is term insurance the right choice? And really, it's ideal when you're young and you're starting to build wealth. Usually, we talk to people, they're in their 20s or 30s. You might not have a large emergency fund or significant assets built up. So term insurance offers affordable, high-value protection during the early years when your family or partner relies heavily on your income. You want to cover specific financial obligations, and it usually has some sort of end date. So most Canadians have time-sensitive financial responsibilities that could include like a 30-year mortgage or a car loan or student debt, or you're raising kids and you want to make sure that they can get to a point of independence, or you want to make sure that they can pay for education. Term life insurance provides that peace of mind during these kinds of periods. If something happens to you, your family won't be left struggling to manage major financial commitments. Also, if you're budget conscious, but you still want to have that meaningful protection, right? Permanent life insurance offers lifelong benefits, but they generally come with higher monthly premiums. So if your current cash flow doesn't allow for that, term insurance lets you lock in protection today without straining the budget. Also, if you're focused on building investments or your savings, so if your strategy is to invest your money into RRSPs or your TFSA or your new first home savings account or into a growing business, the term insurance acts as a cost-effective safety net, which frees up your capital for the long-term wealth building of these other types of assets, but gives you that protection for your loved ones that you need. Some additional benefits of term insurance, one of the biggest advantages of term insurance is that it's a temporary expense with a clearly defined timeline. You decide how long you want that coverage. Do you want it for 10 years or 20 years or 30 years? Once that term ends, you don't have to make any premium payments unless you choose to renew it or unless you convert it into a permanent policy. So this makes term insurance very flexible. It's a flexible option for Canadians that need that coverage for a period of time, but you don't want a lifelong insurance commitment. And then what happens when your term policy ends, when you reach, when your policy reaches the end of the term? Well, you're not stuck. You have several options depending on your changing needs and depending on your financial situation. Almost all term policies in Canada are what's called guaranteed, renewable, and convertible, which means that you have basically three options when that term period ends. So you could renew the policy for another term, and most insurers offer the option to automatically renew your term policy, so for another 10 years or 20 years. However, the premium will be significantly higher at renewal because you're now older. The biggest benefit to the guaranteed renewal is that you don't have to go through a medical again. So this is very valuable if something about your health has changed since you set up that original policy and maybe you couldn't get a brand new policy. But because this is guaranteed renewable, the insurance company will renew it even if you had a heart attack the day before. Often, if you are healthy and can get new insurance, it usually will cost less to set up a new policy than to take the guaranteed renewal price. Another option you could do, you could let the policy expire. So if your kids are now financially independent, your mortgage is mostly paid off, your retirement savings are in good shape, you could choose to let the policy lapse. This is very common for Canadians who don't have that need for insurance protection after the 10 years or 20 years. Yeah, this is fine. So when your 20-year period is up, you could just cancel the policy and then you just don't have insurance, but you ideally don't need it at that time. The third option is you can convert. You could convert the policy to a permanent life insurance policy. So many term policies in Canada come with this conversion option, which allows you to transition all or part of your coverage into a whole life or universal life policy without any medical exams or health questions. And then this is very popular for people who want lifetime coverage. So they want to make sure that there's a death benefit, regardless if they pass away at 60, 70, 80, 90, 100, whatever. You have that tax-advantaged cash value growth, which we talk a lot about in the other videos on our channel. You have a guaranteed death benefit which really helps with your estate planning and final expenses, final taxes. So we strongly recommend that you review your conversion options and your conversion window with whoever is your advisor, because different insurance companies have different periods where you have to tell them whether you're going to convert it or not. And so that's not a forever window. There's a certain period of time that you have to tell them. And so why would you consider converting a term policy to a whole life insurance policy? If you currently have a term policy, you might wonder, what are the options when it comes to long-term financial planning and protecting your legacy? So one of the most powerful features of many Canadian term policies is that conversion option, the built-in feature that allows you to transition from a temporary to a permanent insurance without going through a medical underwriting. So it's more than just convenience. It's actually like a really important planning opportunity, especially if your long-term financial goals go beyond just your short-term income protection. And what does it look like when you do a term to permanent life conversion, right? It allows you to convert your existing term policy into a permanent policy, again, whole life or universal life, without the medical. So this means that even if your health changes, your new permanent coverage is guaranteed as long as you convert within that time frame that's outlined in your policy. It's an excellent strategy for Canadians who want to maintain their insurance coverage for the rest of their lives, build tax-deferred cash values inside the policy, maximize your estate planning flexibility, right? The ability to pay out when you pass away gives your estate a lot of flexibility because there's now money to do things. And it ensures a guaranteed tax-free death benefit for whoever your beneficiaries are, for whoever you want to inherit, right? Usually this is people's kids. Why would you convert it then from term to whole life? Well, there's several reasons why converting the term insurance to a permanent policy makes sense, especially as your income and your assets and your financial priorities evolve over time. So firstly, you can build a lasting legacy. Whole life insurance provides a guaranteed payout no matter how old you are when you pass away. So this is an ideal solution for individuals who want to leave a meaningful inheritance. They want to fund charitable donations. They want to create intergenerational wealth for their kids and grandkids. Maybe number two, you want to create a tax-free wealth for your heirs. So permanent insurance, especially those are structured for estate planning, can serve as a powerful tax shelter. And the death benefit is paid out tax-free to your beneficiaries and can be used to pay final expenses, pay off debts, or preserve family assets, so like a cottage or an investment property or a business. And then thirdly, you want to protect your family from estate taxes. So if you own real estate or you own private shares or other appreciating assets, your estate may face significant tax liabilities when you pass away. So converting to a whole life policy ensures that there's a guaranteed tax-free payout to cover these tax costs, so your family doesn't have to sell assets so that they can pay the CRA. Another reason is that you want to provide for a lifelong dependent. Now, this is really important. If you have a child with special needs, or you have an aging parent or another dependent who's going to need support after you're gone, permanent insurance offers that lifetime security and the peace of mind. And if you mix this with trusts alongside the insurance planning, you can ensure that your wishes get carried out, or say, like a disabled adult child can have money there for the rest of their lives, even though you may not be there. Another big reason why you might want to convert your term policy to a permanent policy is you might be uninsurable now. So when you set up the original term policy, everything was fine, but now your health has changed. And this is one of the most overlooked benefits of converting your term policy, is that you can do it without medical evidence. So say you've experienced this change in health, or you've developed a condition that makes new insurance difficult or impossible to get. Conversion allows you to secure lifelong protection and locks in your insurability forever. And then how does it work, right? How do you convert your term policy to a permanent policy in Canada? So every insurance company in Canada has its own rules around when you can do this and how you do it. It's called the conversion period. And again, it varies between insurers. So some allow conversions during the first 5 or 10 years of the policy. Others may let you convert at any time between the term is there, as long as it's not expired, or anytime before a certain age. So sometimes you have to convert it before you turn 65 or before you turn 70. And then this is kind of the step-by-step of how it works. So first, you would initiate this conversion request. So you would talk to your advisor or to the insurance company directly and let them know you want to convert your term policy. And this should be done before the conversion period ends. So you need to know what that conversion period is and what are the rules for your policy with the company that you're working with. Next, you need to choose the type of permanent policy. So depending on your goals and depending on what the insurance company actually has, you can choose from whole life or universal life or what's called a T100. There's different types of permanent options, right? So, but you can only convert to the type of options that insurance company has. You can't convert to a different company. And then what would happen is you're going to receive a new quote for the new premium of the new policy that's going to be based on your age today at this time of conversion, not at the original age that you set up the term policy in the first place. There's no medical exam. So as long as you're within this conversion window, you don't need to undergo any new health assessments, no tests, there's no underwriting. Even if your health has declined since you originally set up the policy, you can do the conversion. And then you got to choose, do you want a partial conversion or a full conversion, right? So you can convert all or part of your existing term policy. So for an example, if you have $1 million term policy, you might convert 250,000 of that into permanent coverage. You could even keep the rest as term insurance and let it play out the term, or you could cancel it. And there's a lot of options. Again, this is where you want to talk to your advisor and update your advisor on like your current situation and what are your goals, like what's changed. And then we can figure out how much of this you should convert. So why do you want to work with an advisor when you're doing your conversions? So converting the term policy to permanent, it can be a powerful financial move, but it's not one size fits all. Every situation is unique. Every insurance company has different conversion rules and they all have different product offerings. So if you were working with somebody like us, here at Safe Pacific, we help you to evaluate your current policy. We'll figure out your conversion window. We'll compare different permanent insurance options. We'll work with you to understand the costs versus the benefits for your goals. And then we'll ensure that your conversion aligns with your broader financial and your broader estate plan. So the earlier that you can plan this, the more flexibility you have. If you're in your 30s or 40s now or 50s, you don't want to wait until the term is about to expire because the cost of the permanent insurance that you're converting to will increase every year as you get older. So the benefits of converting your term insurance to a whole life policy is that it can be one of the most strategic financial decisions that you make, especially if you're looking for that permanent protection. You want the tax advantage growth. You want the long-term wealth planning. You want the estate plan. Whole life offers that range of unique benefits that goes far beyond just death benefit. It can become a foundational asset in your total financial portfolio. So we've had many clients that start with an affordable term policy and then convert to a whole life policy as their needs change. And here's why it makes sense for Canadians who are really serious about preserving and building wealth, right? Number one, you get that guaranteed payout. So you have a lifetime financial protection. Unlike the term policies that we've talked about before, they only pay out if you pass away during this certain period. Whole life insurance will be a guaranteed tax-free death benefit that's paid out regardless of when you die, even if you're 100 years old. So this makes whole life insurance really a reliable solution to ensure your family receives that tax-free inheritance, provides money to pay for final expenses and to cover debts. It creates a financial legacy for your kids or for your grandkids. It can make charitable contributions a good part of your estate plan, right? Because whole life insurance never expires, your loved ones are guaranteed to receive that benefit whenever that time comes. Second, you've got the tax-deferred cash value accumulation that's inside the policy. So this is one of the most compelling reasons to convert to a whole life policy if you've got the budget. It's the cash value component. And then a portion of every premium that you're paying to these whole life policies goes towards building a tax-deferred and growing cash reserve inside the policy when you set them up right. So over time, the cash value becomes a liquid asset that you can access even when you're alive. So it can provide a source of fund for emergencies. It can provide a way to supplement retirement income. It can provide capital for investment or large purchases. It can be collateral for loans. You can get collateral loans. You can borrow against your policy's cash value. Doesn't trigger a taxable event. So this gives you a lot of flexibility and control over your wealth while your investment inside the policy continues to grow. Third, there's powerful estate planning and tax efficiency. So whole life insurance is one of the most effective estate planning tools that's available to Canadians, particularly, even more when it's owned corporately or if it's structured as part of a larger legacy plan. And some key tax benefits of this include that tax-free death benefit to your beneficiaries. Life insurance payouts also bypass probate. So if you've got a named beneficiary on the policy, your policy doesn't have to go through probate. It also can minimize capital gains taxes on assets like real estate or private company shares. It wouldn't minimize the cash value, but you could use the insurance proceeds to pay off these capital gains on your property or shares or whatever. This also creates that liquidity to pay estate taxes and makes it so you don't have to sell off these other assets. If you're an incorporated business owner, a corporate-owned whole life policy can also fund what's called a capital dividend account, or a CDA, which allows the company to pay a tax-free dividend to shareholders after somebody's death. So this preserves the corporate assets while avoiding personal tax. And again, like I mentioned before, it could provide lifelong support for financial dependence. So if you've got a child with special needs, or you've got an aging parent or spouse who really depends on your income, that whole life insurance ensures that you can provide financial support for the rest of their lives, even if you're no longer there. So by converting to this whole life, you lock in that lifetime coverage that gives your loved ones a steady source of funds, protection against financial uncertainty, that long-term stability and peace of mind. And it's especially important for families who need to plan for multi-generational support or who want to fund a trust for vulnerable dependents. And then fifth, you've got the predictability and stability in uncertain markets. So with the guaranteed premiums, the guaranteed death benefit, the guaranteed cash value, whole life insurance offers unmatched financial predictability. While markets fluctuate, right now we're in a pretty crazy market time, your whole life policy continues to grow, giving stable returns without risk exposure. If you're a conservative investor or you're approaching retirement, this makes whole life insurance a really low risk asset class that can complement your investment portfolio, and it provides diversification. Another reason is the peace of mind and the flexibility. So one of the greatest benefits of converting to a whole life policy is the peace of mind it brings. You're not just protecting your loved ones in the event of your passing, you're also creating a financial tool that can adapt with you over time. So this is whether you need access to capital, or you need ongoing family protection, or you need estate tax coverage, or you need a way to pass your wealth tax efficiently to the next generation. Whole life is really versatile, and it's a powerful solution that meets these types of needs with certainty and with clarity. And now here's another couple of strategies that you can use to maximize your term insurance. So one thing you can do is you can do what's called laddering your term policies. So instead of buying one large policy for 30 years, you could layer several smaller term policies with staggered end dates that can match your insurance needs more closely, as your insurance needs ideally would decline over time. This would save you money. You could buy a new term policy, so you could apply for a new policy at the end of your current term. So you would need to go through medical underwriting. So ideally you're still healthy, but if you're healthy, it's usually cheaper to get a new term policy once your old term policy has expired, rather than renewing it at the much higher rates. You could also supplement with permanent insurance. So this isn't one of those things where you have to choose one or the other. Now, I know we're here on the internet and we're supposed to plant a flag and say the only thing you can do is this one thing and you should never do the other thing. But that's not how real life works. That's just good for getting clicks and for causing commotion on the internet. But you don't have to choose one or the other. A lot of our clients have a combination of both. You have some term insurance, which is low cost, and then you have the permanent insurance, which is permanent but higher cost. And then you can adjust and have more of this or less of that along the way. So when should you convert your insurance? Well, we recommend converting if you're getting up there in age and you want long-term coverage, or if you've experienced a major life event like a new child or a new business or a serious change in health, or if you're thinking about legacy planning or estate protection. Also, you may be uninsurable in the future due to health concerns. So final thoughts. Term insurance is essential foundation for many Canadians that are starting their financial journey. It's affordable, it's flexible, it provides immediate protection when your family needs it the most. But it's not a one-size-fits-all or a one-and-done solution. So as your wealth grows, as your financial goals evolve, converting to a permanent policy like whole life may be the right next step. So at Safe Pacific, this is what we do. We help you to make those decisions with clarity. Whether you're just getting started with insurance or you're looking to convert a policy into a long-term wealth or estate strategy. If you want to look at your plan, if you want to look at what plan suits your needs, set up a meeting. Go to our website. It's safepacific.com. You can fill out the form there. We'll find a good time to meet. The meetings are no pressure, no rush. And we do them all on Zoom. So we meet clients all across Canada. And it's very, very simple. And we're pretty direct and straightforward during those meetings. Now, before you go, if you can do me a favor and you can click the like button, leave a comment if you got any questions, subscribe to the channel so that you get the updates when we post new videos. We post new videos here every week. And please share this with anyone who's looking at insurance right now. So somebody who's maybe just bought a house, somebody who just had a new child, somebody who's starting a business. These are generally the people that need to start talking about their insurance, and they might not have ever talked about it before, and they might not really know what they're doing. So send them this video, share it with them. That's it for today. Thank you, and I will see you next time.